If Microsoft is slipping back into old behaviors, investors may want to take notice and a defensive posture. Since 2015, 11 months after Satya Nadella assumed the role of CEO at Microsoft, the stock price has increased from a rough $55 per share to over $200. Microsoft investors are undoubtedly very happy. But over the last 6 months of 2020, Microsoft's stock price has stalled, along with Apple, Amazon, and Alphabet and Facebook, at less than half the gain of Apple. The stock is even stuck in a rut below the performance of Amazon over the same time period. Microsoft investors should be asking what's up. What's up are signs Microsoft as a business is reverting back to old patterns of behavior, predating Satya Nadella's tenure as CEO. Investors weren't sold on those behaviors and punished the stock by putting it into a state of near suspended animation. For an enterprise software business in the dominant position for a wildly popular computer platform, for much of Steve Ballmer's tenure as then CEO. Note the stock merely doubled in price over the 5-year period depicted in the following chart, grabbed from the macrotrends.net website, significantly below the increase in price of the S&P 500 index over the same time period. Here is a chart depicting the performance of the S&P 500 over roughly the same time period. What are these behaviors? 1. Excessive complication of products. A few years back, Microsoft announced an intention to perpetually update its Office 365 suite of productivity tools. Microsoft's core customer segment, really big businesses and organizations, were challenged by this decision and pushed back against it. Nevertheless, Microsoft has continued up to present with it. While the process could be used to simply improve existing features, Microsoft has chosen to skip this option. Instead, features are sunsetted to permit the introduction of new features hard to discern as any improvement over their predecessors. Second, Microsoft Teams has been stylized in this manner. The product was introduced with some promise, but what can only be seen as an intention to, quote, compete to be the best, end of quote, regardless of the cost of the decision, presumably against Slack, has resulted in a bloated set of features users are constantly challenged to use. End result, recent talk of Salesforce buying Slack has prompted a lot of press on just what this union should happen, will do, to Microsoft's dominance in the productivity suite market. 3. Rigid adherence to old work patterns not suitable for post-pandemic world realities. The highly publicized and potentially disastrous delay of the launch of the latest version of the video game Halo was attributed in part to an inability to produce the game, with developers working remotely, in a story written by Dina Bass and Jason Schreier for Bloomberg back in August of this year. Next, Microsoft's top deal maker departs Redmond for EQT, a Swedish private equity firm. Is LinkedIn not paying off? Microsoft investors may want to practice some Hamletian behavior and sniff the Redmond air to make sure there is no sign of rot setting back in. My name is Ira Michael Blonder. I'm the CEO and founder of IMB Enterprises, Inc. We're an advisory firm. We work with the C-suite at early-stage enterprise software companies. Please check out our webpage, https://www.imbenterprises.com. Please also check out my personal Twitter page, @MikeTheBebop. Speak with you tomorrow.